Good morning, everyone. Apologies for the delay, but glad to have folks who have already joined in. We're here today to talk about the future of P2P lending. And it's a very, very exciting topic personally to me because I've been looking at how this segment has grown in the last couple of years, and it has been, um, calling it an exponential growth would be the right way to, define the growth that the sector has seen. Uh, P2P, of course, as a segment has been around for a while. Of course, P2P is a regulated space as well. But I think the time, for P2P to scale is now. And we're seeing that in the last couple of years, P2P NBFCs have grown almost twice X in revenue, many of them also being profitable. So I think it's been years and years of setting the right processes, ensuring that the right customer experience is provided, which is why today P2P has become quite mainstream, both from lending and investment standpoint. And we have, experts, we have the stalwarts in the P2P space who are here to talk to us about how the sector has grown till now and how they look at the future of P2P going forward. So I would love to introduce the panel members who are here with us today. We have Mangala Gauri Bhatt, who is the Chief Transformation Officer for Access Trustee Services. Access Trustee plays a pivotal role working closely with P2Ps to enable, the trustee set of, let's say, operations and compliance that is required for P2P to happen. We also have with us Karun Tareja, who's the head of marketing and product at Faircent, one of the pioneering and key P2Ps to have transformed the way P2P lending and investment is looked at. We also have Manik Khosla, who's the head of strategy and new initiatives at Lendbox, a very innovative and tech-first P2P, which is partnering with fintechs to really bring about the P2P revolution in the country. We have our very own Akshat Singhal, who is the head of product for payouts at Cashfree Payments. And we've been working, Akshat and team have been working very closely with a lot of NBFCs as well as P2P NBFCs as a TSP and as a product partner. And my name is Aditi. I head product marketing and strategy for Cashfree Payments. And I'm really excited to have these esteemed set of folks to talk about, what is the future of P2P. I would also request the audience attendees to please put in your questions if you have any insights, any questions, and we'll try to pick them up as we go during the conversation. But my first question comes to Karun. As the head of product and marketing, you would have both sets of insights, right? The customer insight as well as the insight from a tech and product standpoint. So Karun, tell us how with your deep experience, how has the customer behavior for P2P changed over time, right? Both from an investment and a lending standpoint. What kind of trends have you seen and what have you leveraged to ensure that you can fulfill these changing customer expectations for P2P?
So I think there is on that point there is a certain aspect which is from an organizational perspective, and then there is of course the need which you see in the market. I think when we're looking at P2P lending, we are fundamentally have two oceans to boil. Like on the one side, we are looking at customers who have the need to invest their money and generate a good return out of that money. And on the other hand, we have customers like who want to, who have a need for credit, and we are trying to satisfy that need for credit. Now, these are actually like quite large markets, right? And P2P has been trying to find its niche in these two large markets. When we start looking at the investment side of the business, each of the P2P players in my mind has been trying to find what is their true kind of customer, and similarly, Faircent is on that journey as well. Like from a Faircent point of view, we are actually slightly more focused around customers who have the need to generate returns which are fairly stable and much and better than what the traditional options offer. But also, because there is a certain amount of risk which is attached to investment, we are more focused around customers who have a little bit of understanding on risk, right? So we're not really looking at very mass market approach on the investment side. But we're looking for customers who have a certain understanding of risk, right? Now, when you start looking at this kind of a customer base, some of the key things, which you have to look at is building trust. It is very essential to build a lot of transparency, right? Because such customers appreciate a lot of transparency. They do understand a risk, but at the same time, they want to have the data and the insights, and the depth in the platform to be able to trust it, right? So that's one of the key things which we've been focused on. I think overall, like you rightly mentioned, the time is ripe for P2P to scale. So we are also looking at expanding the ecosystem and working with partners, etc., to expand that ecosystem. So consequently, we have a second type of a customer, who's come into play, which is a channel partner, and that's the second type of a customer we're focused on. Does that answer your question?
Yeah, absolutely, absolutely correct. I think one very important thing you highlighted is that you tend to focus on customers who do have an inherent understanding, or at least are able to get that understanding of the risks and the nitty-gritty of what P2P investment means, as well as, of course, the lending side of things, right? I think that's a very, very important point, and I would actually want to then extend that point to talk about the role of a trustee in the P2P ecosystem. We have Gauri with us from Access Trustee, and I think in all forms of lending, but especially in P2P, trustee has a very, very critical role to play. Of course, in terms of setting the operations, but also in instilling more trust, in the ecosystem, right? So, Gauri, wanted to ask this question to you, right? Could you help the audience understand what is the role of a trustee, and how do you ensure that there is, more trust in the ecosystem of P2P through the role that you guys play as a trustee?
Okay. Um,
Sorry, Gauri, we are not able to hear you. I'm not sure if there's a audio issue. So while Gauri comes back in, I think there's one question specific to Faircent, Karan, and maybe we can take that. Ankit Joshi has mentioned that he has been investing in Faircent for the last 1 year, and he wants to understand what is the vision to safeguard capital of investors. I mean, you need not give a lot of specifics, but I think at a high level, if you could, touch upon. I think this is a prevalent question that people have, right? How do P2Ps safeguard capital of investors? So anything that you would want to highlight on that end, Karan?
So I think on that point, one fundamental aspect of that is that P2P lending is not a risk-free investment, right? So there is, this question about protection of capital is a little bit of we're basically balancing like a fine line, because fundamentally, since there is risk, there is putting safeguards in place only works to a certain extent, right? So one of the key things, behind taking care of risk is to ensure that, when the on the borrowing side, the credit side, when we're onboarding borrowers, there is a lot of due diligence which is being done around onboarding them, right? So there are controls, which are there from a risk perspective, from actually knowing who the borrower is perspective. So those controls are there in place. That's one aspect, right? The second aspect is that the risk kind of needs to be diversified, right? And the more the diversification of the risk is, the lower it is the effect on any individual who is bringing the capital to kind of invest. Right. So now that diversification has can take different dimensions. Like for example, one would be just quantity. Like so, for example, if you have a lakh of rupees to invest, it is going behind hundreds of borrowers rather than just a few borrowers. Right? So that's one aspect. The other aspect is that diversification across different kinds of loan products. Right. So if it says typically like a single type of a loan product, then still your risk is kind of concentrated into one bucket, right? So there are various strategies which are there to basically ensure that with diversification, risk is mitigated. The second aspect around this is fractionalization, which basically means that not all. So it's a different aspect of diversification, but which is like you're looking at. So like on our platform, the rule is that if a lender is making an investment or a lender is lending out loans, it has to be to a minimum of 5 borrowers, right? Although like in real terms, it comes out to be like hundreds, but basically, you're fractionalizing that investment, right? So like this, there are a lot of different things. So the other aspects are there, like, with the trustee, the platform is completely hands off the money flow. So whatever money is flowing is between the lenders and the borrowers, and the borrowers are basically whatever money is coming back is again flowing back to the lenders. The trustee governs that, so there is a governance side to the whole way in which the platform operates, right? Um, um, so I think to a large extent, as far as Faircent is concerned, like we've been able to provide those to be able to move on those two pillars, and ensure that to a large extent the capital of the lenders is safe, right?
Got it. No, thanks so much, Karan. I think that those are important points that even the investors need to be aware of, so that they know that there is obviously risk involved, and you need to also, just like you have a diversification strategy in general for investment, even within P2P, you need to have a strategy in place on how you are investing. We do have Gauri back. I think, Gauri, are you able to hear us?
Am I audible?
Yes.
Am I audible?
Yes.
Okay, I'm really sorry about the technical glitch. Yeah.
No problem. Please go ahead.
Yeah. So just coming back to your question,
Yes.
I mean, just to emphasize on the role of a trustee, when I talk about, let's take a step back and see how traditionally what is the role of a trustee. It's my essence, rather my core job is to protect the investor interest and bring in good governance practices and ensure the compliance is done, correctly. And in case of delinquency, as a third party or rather a neutral party, I'm there to kind of monitor. So now coming back to P2P, my role in overall, the essence remains the same. I'm here to, as Karun rightly mentioned, bring in more transparency and have proper governance over the cash flow, how it is kind of distributed amongst borrower and the lender. That happens in the most transparent manner. And today, in today's time, the compliance plays a very crucial role, in all aspects, not only trustee, all stakeholders who are, involved in the entire process, right? So trustee, considering I have handled other regulated DNA, compliance is at the core, right? So I'll be as a trustee, and if you look at RBI regulation, it talks about trustee who's part of the entire P2P process is a bank promoted, or rather the institutional backed trustee, right? So here with that, I can bring in a lot of stability and the transparency which is required in the overall process. And I would say as a trustee, I'm best poised to embed the compliance and the best practices into the entire P2P process from
Gauri, your voice is breaking up a little bit. So maybe you can switch off the video. That might be easier.
monitoring or rather governing the cash flows and more
Sorry, Gauri, your voice is breaking up. So maybe you could try reconnecting. Maybe you could try reconnecting, Gauri. Your voice is breaking up a little bit. If you could reconnect on audio, that'll be great. While Gauri comes back, I think there's also a question here, maybe as a follow-up on what Gauri was mentioning, on what is the role that RBI has to play in overseeing P2P lending platforms, right? And I think that also is a primer for me for the question I was about to ask Manik. While we've been talking about, the phenomenal growth that P2P has seen, but we also know that P2P over the last few years has had to go through a lot of regulatory changes, right? And the regulatory environment also has been fast changing to ensure that there is compliance while scale happens, right? So Manik, wanted to request you to shed some light on how has the regulatory environment evolved over the last few years for P2P, and how do you ensure compliance while also making sure we spoke in the beginning in the first question, Karun, that we are also, P2P is also focused on customer centricity. So how do you ensure that you can scale while also being completely compliant with the, regulatory requirements?
Thank you, Aditi, for the question. The last 1 year, in fact, has been very exciting for all of us as an industry, if you may call it as such. The regulator has met us a few times, more than a few times, interacted with us. There have been formal and informal conversations. They have seen or inspected our books, scrutiny as some of us may like to call it. And they've given us a lot of constructive feedback, if you may call it that. So we have to appreciate that the RBI is one of the most innovation-friendly regulators in the country we have right now, right? They understand that innovation and regulation go hand in hand, and sometimes innovation might come before there is regulation, but they're nice enough to understand that, see the pros and cons, and weigh, and obviously also keep public interest in mind while ensuring there is sufficient regulation, which does not hinder anything which is helping people. So I think we've been lucky that way. They've given us a few points where we need to work on our business practices. They've also been kind enough to patiently hear us out and accept a lot of advancements, which we call technical advancements in the business. In fact, I'm very glad to share that a few larger platforms have come together to form a new P2P association, which will eventually graduate to being the SRO, the self-regulatory organization for the P2P platforms. So that is in the works behind the scenes. We met the RBI as an association. We met all departments. And like I said, they've agreed to meet us midway, where we've obviously taken a lot of their feedback very positively and are making changes to our business practices. And and that being said, it is not doomsday for the P2P industry, contrary to what a few business journalists may believe and type out every few weeks. We are a growing industry, we are a young industry, and obviously, like I said before, sometimes regulation will come before innovation has happened, and sometimes innovation will follow regulation. So we understand that, and we appreciate regulation. We understand why regulation is important, because we're dealing with public money at the end of the day. This is retail investor money. People are putting in very hard-earned savings. People are starting investing as low as 1,000 rupees. That is what we call innovation in the industry. That is what we brought new to the investing and the alternate investing space. So we understand and we appreciate regulation. And I think all the larger platforms would agree that at the end of the day, some changes to business practices are needed to be on the right side of the law. All of us are more than happy to do that. And to answer the second part of your question, yes, compliance is very critical, given that as an industry, we now sit on about 10,000 odd crores of AUM. We have over 1 million retail investors who put in money, and I think over about 10 million borrowers cumulatively who've taken loans. So, and there's a large set of regulations at the end which we have to comply with, right? Besides the P2P master directions, there is digital lending guidelines, there is KYC, there is reporting, and there's a bunch of other things that is payment guidelines that we have to follow. So, yeah, and all of these safeguards are in place to ensure that we're on the right side of the law. So that being said, all of these regulations do ensure that platforms stay at the right side of the regulations and are not doing anything which might harm public money at any cost. Yeah, thank you.
Thank you so much, Manik, and also thank you for sort of clarifying. I think there's sometimes a lot of fear mongering that happens amongst people, right? When there are journalists who write about how the P2P industry is going towards doom, etc. But I think I am on the other side. I'm very optimistic because I've seen how well the industry has grown, and like you rightly said, I think folks from other adjacent or sister industries would also I think agree with you that RBI has been very active, but for all the right reasons, and has also been very cooperative, right? In the payment aggregation space, also we've seen the same thing, right? There's innovation followed by regulation, but also the fact that the regulator wants to ensure that there is protection of customers' interest, but also not throttling innovation, right? So I think absolutely with you on that. Thanks for telling us more about how P2P as an industries are also sort of coming together to ensure that there is regulated but innovative growth happening in the industry. Great. I think now coming to the product aspect of things, right? I mean, P2P as a segment, like we talked about, has a lot of different levers. So it's very I would say important to have the technology and product piece in place. Akshat, we have you with us. And there's also a question, so I club the two, right? The question is about how critical is the role of advanced escrow technologies in P2P innovation, but also the fact that P2P itself, while it is a form of lending and a form of investment, but it has certain requirements. The P2P industry has certain requirements which are unique versus other NBFCs, right? So wanted to request you to highlight to us as a product expert, you've been working a lot with NBFCs and P2P NBFCs, right? What is unique in terms of product requirements for P2Ps that you see today? You're on mute, Akshat.
Thanks a lot, Marek, Karun, and Gauri for your input. So I think one of the key difference when it comes to P2P lending is that traditional lending was pure lending.
But your has an issue.
Is it better now?
I don't know if others can.
Let me try earplugs.
Now we can't hear you.
You can't hear me?
Yes, perfect. This is good now.
Oh, okay. So what I was saying is that one of the key aspects of P2P is that like in traditional NBFCs, the lenders were few and the borrowers were many. In P2P, it's a many-to-many network. So there are many lenders and there are many borrowers. With that in mind, there are few things that we are trying to do differently from product. The first is setup of an account through which funds can flow. So a new escrow account has to be set up by which funds can flow. As per RBI guidelines, there should be one-to-one clarity of funds flow from investor to a borrower. P2P platforms cannot put in their own money. So arises a need of configuring or setting up virtual accounts so that it becomes very clear how the fund movement is. So one of the key APIs that we offer is to allow creation of virtual accounts on the go and associated ledgers on the go. With that in mind, we create virtual accounts for funds flow, but funds will only flow when we have approval from trustee as well. So this is another thing that we provide out of the box, and we are working with trustees for having deep integration to one, have a win-win situation for P2P and also support trustee in other scenarios, let's say escrow, right? Coming to the question that was answered, right? That what is the role of trustee when it comes to P2P? So trustee are supposed to approve most of the payments or most of the payouts or dispersals, right? While this can be done and is being done manually in some pockets, the way forward to scale this industry is to systematically do it via API integrations, via automation. This is where we are developing a deep nexus of integrations with multiple trustees to enable P2P lenders P2P platforms get these functionalities out of the box. Few more things that I think we are doing from a product perspective. One is around AML guidelines. So in AML, when we think about AML guidelines for traditional lending, platforms have to think only about the borrowers. In P2P lending, we have to think about both borrowers and lenders. So we have a product which offers a customized list of blacklisted and relisted accounts as per our experience of roughly 8 years of doing business in the industry, which a lot of P2P platforms will be able to avoid and therefore be more compliant with the AML guidelines. That's last 2 points. So one is, as I said, it's a many to many fund flow, many lenders to many borrowers. That reconciliation becomes all the more difficult because now there are n number of n square combinations that are possible. With the escrow account and the virtual accounts, we are offering out of the box reconciliation. So one, all the borrowers and lenders are sure that whatever money they have lended or they are receiving is reconciled, it's the correct amount. And for P2P platforms, they don't have to invest manual effort or have to create systems to reconcile. They will get everything out of the box. Lastly, onboarding is a very critical aspect. We have to onboard 2x the number of users from a lender and borrower side. So we offer a lot of out-of-the-box APIs, for example, bank account verification, to ensure that the money flow is from the correct bank account and to the correct bank account. KYC, eKYC, Aadhaar APIs to understand the persona and to understand in more depth about the lender and the borrower as per the KYC norms set by the RBI. All this will help P2P platforms to go live soon and to save on the customer acquisition cost, which becomes very important as we scale up the industry. So these are the list of 5 high-level points that we are working on.
Yeah, thanks, Akshay, for highlighting. I think, like you rightly mentioned, the fact that there's many to many, there are a lot of back-end things that need to be taken care of. The fund flow, reconciliation, even the onboarding verification, all of these are things. So the importance of TSPs will only grow as this industry grows. And of course, the TSPs are looking to work closely with the trustees as well as the P2P platforms to keep building more and more. So thanks for highlighting that, Akshay. We have a couple of questions. So, Karun, maybe I'll request you to help answer some of them. So one of them is, on the industry NPA for P2P. And the second question is about, and I think this is something that comes to the mind of a lot of people who are looking to invest for the first time in P2P. How safe is P2P provided that many small companies are mushrooming day by day? How do I know whom to trust? So I'm just combining the two questions, but wanted to request you to help answer those.
Okay, so firstly, I think what you have to understand is that a P2P is necessarily has to be operated by an entity which has received a certificate of recognition as an NBFC P2P directly from the RBI, right? And if you go onto the RBI website and look, you would find a list of all the licensed entities on the RBI platform, right? So there is a registration number which every P2P NBFC gets, and mostly like on the platforms, you would find that registration number is provided. And secondly, you can corroborate that by going to the RBI website. Right? Now, as a part of the certificate of providing the certificate of registration, as a part of the process, it is almost like a 2 to 3 month process which RBI goes through with each entity and analyzes the way the P2P entity envisages conducting P2P business to a lot of depth, right? Which includes looking at who the promoters are, what is their background, where are they coming from, what is their experience level, can they or can't they operate the platform. Secondly, like, from a process perspective, is the platform or the system which they put in place compliant with what RBI has put out in its direction. Like, only then does the company receive a license, right? Now, as a part of the RBI regulation, every platform regularly has to provide information around NPAs, which the platform is, which are there as far as the platform is concerned, right? So on every platform's website, you can go and find this information, and you can look at this information to understand what is the NPA which each one of the platforms is going through. Now, having said that, you may find that there is a bit of a range, as far as NPS is concerned, which really depends on what is the acquisition strategy as far as each platform is concerned, which may be different from case to case, right? So, like, for example, like if a platform is undertaking shorter term, more risky loans, the NPAs could be higher, but typically this strategy is undertaken because the platform basically sees a higher level of profitability and the ability to generate a higher return on investment for the lender, right? So there is a balance there, right? So, or it could be that the returns are lower, but and consequently the NPAs are also lower because the loans which are going out are going to lesser or risky individuals or to more stable individuals, and therefore the NPAs are lower, right? There is also the aspect of demand, right, in the market, right? Like, it is obviously like because there is a huge credit gap in the market, right? So there are a lot of customers, like the extent of, like, only, like, we say that 2 to 3% of credit the penetration of credit is only 2 to 3% in the country, right? Which is very low. So there is a huge credit gap. So because of that, there is a lot more demand for higher risk loans as compared to lower risk loans, right? So in order to scale, you may not be able to get as many low risk borrowers, and consequently, like, a platform might start off with having lower risk or lower return loans, but more stable loans. But as they scale, they may venture into higher risk loans because the demand on that side is much higher, right? As far as the market is concerned. I hope that answers your question.
Thanks a lot, Karun. I think that's very well detailed for the person to understand, both on the NPA side as well as the earlier question. Thank you so much for that. You also, in one of your earlier points, had mentioned about going into channel partnerships. So that's something that I wanted to also touch upon. We have Manik here as well. So Manik, wanted to pose this question to you, right? The growth of P2P, of course, a lot of it has also been fueled to fintech partners and partners who have the access to, the customers, both from investment standpoint as well as a lending standpoint, right? So just wanted to hear from you on how do you see this evolve, fintech partnerships for P2P, and do you see any challenges going forward?
Sorry, is that question to me?
Yes.
So we obviously see fintech partners as collaborators in the industry, right? We see them as players who have solved for distribution per se, and not in any particular use case, but across use cases. So these companies have already spent hundreds of dollars on search optimization, et cetera, to bring customers on their platform and offer them a bouquet of services, right? So we kind of serve as one particular product on the marketplace that they are, right? So they're very effective collaborators for us who who help us reach out to a large segment of customers that would otherwise be unaware of an industry which like ours, which exists, right? We're relatively very, very new. We don't have a mutual fund Sahiya campaign as of now yet, because so hence the reach is something that these fintech partners bring to us. And also, we can't deny that, associating with larger partners like these does bring some sort of legitimacy, because these guys have a lot of brand recall, and people maybe trust these platforms because they see their ads on TV, they see their ads splashed across internet, etc., etc. And so associating with these platforms is definitely beneficial for us. And obviously, the platforms also get to sell a new product. They have value add for their customers, etc., etc. Now, we value fintech partners on both sides equally, right? Investing and borrowing. Wealth platforms obviously have access to customers who want to invest and want to earn money on their capital, while credit-seeking population is obviously spread across all platforms evenly. So, real challenge as a marketplace obviously is to create an environment where the borrower pays a just and fair rate on what he's borrowing, while simultaneously ensuring that the investor gets a fair yield, right? And obviously keeping the risk at a minimal is a priority. With scale, obviously we understand that the cost of funds on the borrowing side we can charge will obviously come down. So while we also understand that as a product from a risk standpoint, we always have to have a risk premium in the investor yield over and above what your bank products or traditional products are offering. So that is one big challenge. And the other, obviously, I will call is still investor education, right? I'll repeat, we are very, very young. Not a lot of people know about us. There's a lot of misinformation going out. There are a lot of, like someone rightly questioned, pseudo platforms coming up, selling anything and literally everything under the sun. So investor education is the second biggest challenge that we have as an industry right now. And I think with time we will solve both of these challenges. Yes.
Great. Anything particularly, that is highlighted as a challenge of working with partners versus working direct that you've seen?
No, so in fact, I only see advantages on both counts, right? I won't call these as challenges. They are, like I said, collaborators to the business, and most of these platforms are tech driven, which is how we like the business to be. Information is securely and seamlessly exchanged across platforms. We have right to all customer-centric technical information which the platform should not see, etc., etc. So all of these safeguards are in place, and provided someone who is technologically abled, willing, and access to a good set of customers, we don't see them as a challenge. We see them as collaborators for the wealth space. Yes.
Great. Thanks so much, Manik, for highlighting that. Manik mentioned about tech, the partners being very tech first. I think P2P firms are also very tech first now. So my next question is actually to Gauri. Gauri, I'm assuming you're back, right? Are you able to hear?
I'm there. Are you able to hear me? Is it better now?
Yes, we're able to hear you. So I think, my question is about how is the trustee ecosystem also leveraging technology, because you have to work very closely with the P2P platforms. And of course, there are the tech partners, the fintech partners who they are working with, right? So could you shed some light on how, the trustee ecosystem is leveraging technology, and, how do you see that going forward in terms of what new innovation either that's happening or that you would want to come from the TSP ecosystem to enable this?
Yeah, it's a very valid question, Aditi, because see, how from a trustee angle, how I would look at it is that the P2P platforms and the entire ecosystem is entirely automated. There is very less manual intervention, I would say. So just to create this disruption, all stakeholders who are within that framework has to be tech enabled, right? So then only we'll be able to create the seamless customer experience. So trustee being one of the major stakeholders and having multiple touch points, it becomes all the more important for me to have these enables created. And here we are talking about volume. The industry itself is dynamic, and the compliance expectation and transparency from the regulator is also at the highest level. So that's why, when as a trustee, I'm kind of governing the cash flow and monitoring the escrow mechanism. For me to bring in technology here will create more stability into the entire process. So here, as a trustee, what we are creating, or rather we have created, is that 24/7 booking system and real-time approvals and proper validations all through the fully automated process, right? So we are actually collaborating with TSP partners, Cashfree of them, and trying to build the system which is more compliant, and at the same time it looks at the scalability and those opportunity, or rather create enablers to be platforms to scale their business, and at the same time they can allow all the partners and other TSP platforms. Does it answer your question?
Absolutely, absolutely, Gauri. Thank you. Thank you for highlighting some of the measures that you guys are taking to ensure, like you said, stability and also scale, I'm assuming, right? Because as the segment grows, you want to ensure that you are compliant, but you're also able to cater to the requirements of the platforms or the platforms that you're working with. Thanks so much, Gauri. Gauri mentioned about working closely with TSP partners, and then there's also the collection aspect where the P2P platforms work with payment aggregators. So Akshat, the next question is to you. How do you see, the role of TSPs and PAs? And because Cashfree is both, right? We work in the capacity of a TSP on one end, but we also are a PA. What kind of let's say, new set of things that you see coming in, maybe here and now, but also going forward in the future?
So I agree with Gauri. Gauri likely mentioned that for us to scale this industry, all the players have to be tech enabled. And the vision for us is to enable all the P2P platforms be tech enabled when it comes to both supply and demand side, without having to put in a lot of effort on their side. So there are few things that we are already working on, which I think as a medium-term goal. And then there are few things that we are working on more from a long-term horizon. I'll try to cover both. If we think about a medium-term goal, then the first is the problem we want to solve is the collection. How to enable P2P platforms to have multi-modality collection. How can they collect via multi-collect or reckoning payments on UPI? So UPI is known to be one of the most prevalent modes or instruments when it comes to small ticket size transactions up to 50,000 or 1 lakh. How can we do auto pay on UPI? How can we do in-net for collections back from the, like, how can we do instant settlements and therefore the same money we use for payout? So that after which a lender is able to put in the money on the platform to which they are able to disburse the money to a borrower is almost zero. Right? On the supply side, we are working with both trustees and various banks to enable setting up of new escrow accounts with a very, very low tax and with as much digitization as possible, so that P2P platforms are able to um, go to the market in a very short span of time. Right? Thirdly, that there are multiple limits that are set by RBI. So, for example, a lender can only lend up to 10 lakh rupees across P2P platforms and up to 50 lakh rupees if they provide certificate of net worth. Similarly, a borrower can only borrow up to rupees 50,000 from a single lender across P2P platforms. And as of now, some of the platforms are taking undertakings from borrowers and lenders, but that is not a foolproof solution. For this to happen, information has to be shared transparently between multiple P2P platforms. And I think a neutral player like Cashfree, who anyways working with most, if not almost, of the P2P players, is naturally poised to become this natural and neutral player, wherein collecting some information, for example, PAN number of both borrowers and lenders, we will be able to give visibility to all the P2P platforms that this limit are being adhered to. This will help all the P2P platforms to be in sync with the guidelines and regulations by RBI. On that note, what we are also trying to do is we are working very closely with NPCI, RBI, so that we are ahead of the curve when it comes to new regulations and ensure that there is business continuity with all the partners including trustee and P2P platforms in case of new regulation. I'll take a pause here. Thinking about some of more long-term vision. So one is today, if a borrower defaults on a payout, we are able to see that in bureau credit. But if a lender or a borrower is caught with the intention of fraud, that information is not centrally available across the industry in a transparent manner. We need to have a central fraud repository so that players who are doing fraud or individuals are not able to do it across multiple players, and ideally not able to do it even across one player. Again, a neutral player like Cashfree will be able to both add the information as well as dissipate this information to all P2P lenders. We already have a list of blacklist accounts wherein we can become more AML compliant, and it will be a natural extension to a fraud registry as well. Right. The second is today a lot of players are doing payouts which are mostly manual. So lenders will look at the profile of the borrowers will look at profile of the lenders. For a lender who wants to lend up to the limit set by RBI, which is 50 lakh, or for a borrower to take up more money, some of these things have to be more automated at borrower and lenders end. And therefore, a blockchain-based smart contract, which will be rule-based to either lend money or to borrow money, can go a long way to automate and reduce some of these manual dependencies, especially for lenders who want to lend a larger chunk. Lastly, as of now, P2P lending, the borrowers and the lenders both are primarily in India only, but India has a very, very large and significant chunk of NRIs or Indians, that people of Indian diaspora settled abroad. And what we are also working on is to how we can enable cross-functional or cross-border flow of funds. We are working with the regulators also, and we are also setting up the technology to allow that so that a new stream of incoming funds are open for the borrowers in India.
Got it. No, Akshat, thanks. I think a bunch of here and now, but also long-term, long-term ideas that we TSP should look to implement. I think going above and beyond just looking at dispersal and collections, I think fraud and AML is a very big chunk, right, where TSPs can play a role, especially the ones who have visibility across the board, right, who have a lot more visibility on transactions, such as payment aggregators, of course. Akshay, thank you so much. I think, very insightful points on that. We have a couple of other questions, so I was hoping we could answer a couple before we close the session today. So one question is, and I'll request Karun to help answer this question, is on, so this question is around how P2P lending is very appealing to the MSME sector today. It is more appealing than traditional lending. Is it more lenient on credit score, vintage, or is there another reason why it is an appealing, form of lending for the MSME sector?
Yeah, so I think it has got to do with fundamentally, like, these are the kinds of customers, in whom, like, one is that they have a need for credit which is not satisfied, right? So, like, if you look at the ecosystem per se, like, in the formal ecosystem, typically the formal ecosystem, like if we talk about banks, etc., so if a small organization is doing well but has not completed, like, say, 3 years of operation, chances are that they will be denied formal credits. There is a gap there, right? However, there is data which exists, which like a P2P platform can look at and see, okay, like that the business is doing well, it is generating profit, it has been doing well for, say, the last 12 months, and there is, if you put capital here, there is good chance that get a good interest rate, right? And because because of that history, the confidence level is much higher that, okay, the money, if it goes into the business, it will be able to generate a good ROI, you know, which can come back to lender. So I think that's the key thing where, because of which there is more traction in sort of, you know, like we call it the MSME space, the micro SME space, right? It's kind of like, actually, if you ask me, like, this is the backbone of the country, right? Of the country's economy, right? So it helps, I think, everyone, right? You know, if this is the area where you know, P2P platforms can play a big role to bolster, right?
Great, thanks, Karan. I think absolutely very insightful, and I think that helps answer the question as well. There is one more question around data sources. So maybe Manik, I'll request you to answer this. So you know, you had new initiatives for Letbox, right? So from an innovation standpoint, you know, are there any innovations on, you know, assessing credit due diligence, and also are there alternate data sources that you are using or you are planning to use to arrive at the credit evaluation process today?
So the alternate data sources that you know, all of these all lenders, including us, primarily try to assess credit seeking borrower on are more or less similar across platforms, because and the reason for that is obviously they're differentiated from what a traditional bank would want to look at, right? Today, if I want a credit card from a bank, it will take a month, and my salary slip and my bank statement, probably my rent agreement and whatnot. But because they got certain traditional way, right? While platforms such as us are more efficient in analyzing and assessing more recent and real-time information, I would say. So we do not want a business to have a 5-year balance sheet and 5-year tax returns or a certain legacy. We're more flexible in looking at what the person has been doing for the last, say, 6 months or 3 months, and we want to look at probably where they're spending and how much they're saving, and all of this is obviously based on data and permissions that we come across during the stage of application, right? We're although I would say the banks are also catching up in terms of how they're looking at bank statements, etc., how they're verifying employment, but still there is a lot of hesitancy which traditional lending institutions employ, while platforms like us, I will be honest, this is not limited to P2P platforms. I'd say newer age platforms are all using data points which traditional institutions are still hesitant to look at, and maybe it is obviously because they come with a certain legacy. They attach a lot of risk premium to. While that is, I would not call it P2P platforms are more lenient, or new age lenders are more lenient. They just deal with information and data in a different way than a traditional lender would do. Yeah,
got it. And I think also the partnership with B2C and fintechs also probably help get more feeder of data, because a lot of
correct. So a lot of use case based lending does bring in a lot more data which would not otherwise be part of a loan application, right? Where we, for example, where we tie with payment service providers which a borrower might be using, or I think those kind of information is not regularly assessed in a traditional loan application, but that comes across as valuable while for platforms like us while assessing a borrower.
And then use that to make the borrowing journey or the lending journey easier.
Correct.
Thanks a lot, Manik. And with this, I think we have come to the end of the session. I got to learn a lot. Thank you so much, everybody. Apologies for a little bit of technical glitch here and there, but I think this was super interesting and super insightful to have a set of experts who bring in different points of view, and yet a lot of common I would say sentiment around P2P, which is a very positive sentiment that all of us share. Thanks so much once again. And the folks who have not been able to attend the entire session, we'll also share across the video recording of today's session. Thank you very much. Thanks everyone for joining in. Thanks for being.
Thanks everyone.